Hello and a warm welcome to my channel where I try to cover stocks and the derivative data almost on a daily basis. And in this video, I've covered ICICI Bank, India's second largest private bank. First HDFC Bank and then ICICI, and tried to decode what the entire scenario is from a long term to a medium to short term perspective. So let's start with the multi-time analysis as per Ichimoku on the monthly time frame. And here we can see the stock has had a fantastic run, which everyone knows from an investor point of view also, that the stock has continuously made higher highs in its journey. Higher highs, continuous higher high formation for the stock in every dip. Here also we are seeing the same thing, a higher high formation in the monthly, and now we have one more tiny one formed out here in the monthly. So as long as this trend is held, the uptrend for such a strong stock, especially being a blue chip stock, and all funds would be chasing it based on the strength of it. And based on that, the stock is in the monthly and absolutely sound condition. There is no major dilemma in it from a long term perspective, as long as it respects this higher high trend. And even in Ichimoku, we can see that right from the month uh, of November 2020, the Ichimoku baseline has never been tested. So anyone as an investor who entered around that time has never had to worry about the trail in the stock as it continues to rally upwards. Let's have a look at what the weekly time frame is telling. The weekly time frame has seen a little, because of those pullbacks where the higher lows were being formed in the monthly. And this also has got a very interesting scenario that right from November 2020, the monthly cloud, as per Ichimoku, has never been violated for it. So you see this breakout out here in November 2020. And after that, a test of the cloud happened in 2022 when the whole global market corrected, but yet it held on to this level. And again in the 2020, December 22 to March 23, the stock brilliantly held above the cloud and continued to rally on that basis. The future cloud is still bullish in the weekly, which is a good sign for the stock. However, the baseline has gone completely flat. A flat baseline in Ichimoku suggests that the trend might not be very strong. It could be sideways to, a bit of a consolidation happening or a pullback possibility till this flatness continues. And as per the understanding of what I have of Ichimoku, the flatness in this chart suggests that the weekly outlook the will be flat for at least another 4-5 weeks. This flatness, as long as it does not go and start trading above this particular high, which is 958. Till that time, this flatness will be there, and a flatness in the baseline suggests that it's going to be more of sideways or pullback possibility. Above that 958, the slant of the baseline will again resume and the stock would get into an uptrend. Now let's have a look at what the daily and the hourly time frame are telling us. But before that, let's even have a look at what the option data and the future open interest is telling us, because that would be more concerned from a short-term prospective point of view. Before I get into the option and the future data, just a reminder to those interested in learning harmonic patterns, Ichimoku, multi-time frame analysis, uh, and trading psychology, risk management, because without trading discipline, analysis is of no use. Until you have good control on your discipline, you understand the psychology of the market, because stock market is looks like one of the easiest way to earn money, but on reality, it's one of the toughest ways to do it. And how do we do it? What is the process to do it on a daily basis is taught in this course, and plus risk management. You cannot copy paste someone's risk management. Everyone has an individual risk appetite which is taught in the course, and you will, and also how do we reduce our risk during our trading setups, or in our, even in our investing from a medium term perspective setups, how do we go about it is also covered. The trading psychology risk management sessions will have 10 live 1:1 session with the participant, so that we cover all the issues which are you as a trader or an investor are finding it difficult or don't want to get into a mess which you've already heard others are getting into. We cover that. Plus, we learn on a daily basis on how to reduce risk. While even for the harmonics and Ichimoku, those who go for those courses as pure investors or not as derivative traders and all that, even for them, there is hand holding and guidance through personal one-on-one touch on WhatsApp and through email on clarifying your doubts and confirming your interpretation of the study. Now let's have a look at the derivative data and see what it's telling us. So, so for ICICI Bank, pardon me for saying Tata Motors there. So ICICI Bank has had June series a massive Y of 950. Like I said, the 958 in the weekly Ichimoku is suggesting a wall which could make the trend sideways to dip. Now here also, we are seeing a 950 OI wall, suggesting the call writers are very heavy out here. And today also, there has been good writing in the 950 call. We can see even the lower call behind after that, the 961 also has a high OI additions happening out there also today. While the put side, surprisingly today, not surprising, sorry, because we'll come to the daily candle and the hourly, we'll get an idea of that. Why? There was short covering of the 940 put writer. So these put writers are not confident because the settlement has just started, and this with the price below 940 now in spot, the writers don't want to take a risk. Some have run away from there, and also very marginal 920 and 930 put writing has happened. This could be buyers, out of the money buyers trying to get in, and some of those who have shorted future or bought the at the money puts must be hedging their position. The main sound base is up in the option data is coming at 900. There's nothing before 900 as a major support for from the option data point of view. Now let's look at what the uh, future buildup of ICICI Bank looks like at this particular stage. So ICICI Bank, last 5 days, that is prior to today's move, completely flat. That's the power of the baseline of Ichimoku, which is holding on to that trend, not doing anything. And there is no OI change. So smart money or any large amount of trade has not taken place in it. Today, we can see that was a decline of 1.3%, with also, again, not a huge OI change took place today. But yes, some shorts were there in the system in that, but it's a negligible OI change out here. An overall 5 day is also suggesting a similar scenario, no major signal from the OI data point of view to us out here. Now let's get back to the charts. So in the daily time frame, we can see that the stock has had a massive red candle today, quite bearish one, and has gone and just stopped above the baseline of the daily. This one out here, the baseline out here. Now, this baseline is very crucial from support point of view for traders who are hedged or who buy in cash for short term. Okay, not for the medium term traders. For those who buy in cash, don't do derivatives. They look at the baseline and the support. If this is violated, then there could be some trouble for the stock for going further down, because that's a major trail stop loss which will go out of hand out here at 932.8. Sustaining or closing below that would be a scenario. Below that, I don't see any major support in the zone till 900. That's also what the OI data is suggesting to us. Anything below 900 would push the prices all the way down to 860 odd levels out here. We'll try to configure that now with the weekly and see whether that multi-time frame sets with us or not. Now, before I go there, let's talk about the upside also. Now, before that, in from the month of December, prior to that also, the stock has made completed a bearish harmonic 5-0 pattern. So first it made a bullish all sharp, went up, triggered the bearish 5-0, which did a minimum target, then tried to make a double bottom kind of structure out here. Out here, we can see that led to this rally, and now we have something like a double top structure out here. So this was a smaller time frame double bottom, but this looks like a higher time frame, more like a weekly double top structure. For that, the validation will come only below 900. Till 900, we will not be able to consider it to be a double top scenario at all. Let's look at once again what the weekly time frame support is if that 900 gets violated out here. So the weekly time frame support is at 875. But before that, I can see a little bit of support. Yes, that 900 support. If that gets violated, then we have 875 as a support, which is out here. Also a very thin cloud support of the daily time frame is also out there. So below 900, 875 is what I will be looking for. And huge one below that at 800, which is also a monthly support. So the levels to watch out for 930, 900, 875, like that on the downside. Okay, at those levels, investors will definitely try to look in, funds will try to get in and see. But if you see no sign of support, more weakness, then as in on the long side trader, I would wait. But so far, it hasn't broken down. We have to remember below 930, the breakdown occurs. So just have a look at the hourly candle and see what it has done today. And we saw that the put writers of 940 were covering today. So there is a black Marubozu candle which happened today between 2:15 to 3:15. And if tomorrow we see that follow through sell also coming, I'm not looking at the last 15-minute candle. If there is follow through sell coming, which will take it below the daily baseline, if supposing it starts sustaining below that on the hourly basis, then we have a breakdown coming here for that suggested downside levels. While on the upside, okay, in case it holds it. Now let's talk about the upside level also, because the stock has a track history of maintaining its higher lows in the higher time frame. We saw that in the weekly and the monthly also. So in case it bounces back from this zone, then I will wait for this 950 to be taken out. For me, this zone of 930 to 950 is a non-tradable zone. Intraday would be a different story altogether. Anything above 950, the stock will open for another new high setup, breaching this past setup out here of 960 and possibly head towards 1050 and maybe a lot more after that. So in the extreme short term, that is immediately, I would not try to look at this as a tradable stock. I would wait for a clear move on either direction to happen and then take a punt on it. Above 958, I would go aggressively long towards 1050. Below 930, I will start looking towards the downside levels. May not trade it short, may look for a what do you call level to buy. It totally is an investor and individual perspective out there. And I would be looking at 900, 875, and then at 800, some scenario like that. To see if this trend is complete or not. And for those who could have spotted this what I had suggested out here as a double top scenario that reacted, and then we would be looking for something like this. In case it breaches that 875 wall further down for a double bottom scenario. So in that way, in the higher time frame, in the weekly to a monthly, we would consider this something like a sideways corrective of the whole particular move in ICICI Bank. A disclaimer before I wind up. Please do not consider this as a trading advice. This is purely educational point of view. Please do your research thoroughly before taking a call on whether you need to buy it, sell it, do a derivative trade in it, whatever. Please do that on your own. And I hope this video is of help to you and it has clarified if you had any doubts or it agrees to what your views are. So don't forget to like this video, share the channel and subscribe also to it. Until then, happy investing. Bye bye.